It hasn't been a good year for ChargePoint, and if we scroll up to the monthly chart, we can see after price broke through this downtrend line back in August, price went from roughly $8 all the way down to $2. But I dare say that the lows are in. That's what I like to say. From a macro standpoint, you have the U.S. Feds um, again putting hold on interest rates and potentially are going to start cutting interest rates next year. And so what we see here is on the weekly chart, we're going to call this a drop in price base and candle. And look at this volume coming in very heavy, also an indication that uh, the lows are in. So if we just denote that zone as weekly buyers, potentially what we might see is a retest before the next leg higher. So let's denote that. We'll say 190 weekly buyers at $1.90. Now before we continue with the analysis, we're going to look at this article really quickly. So shares of ChargePoint Holding, the world's largest independent charging network of EVs, were rallying today in response. This article came out on this past Wednesday. In response to the Federal Reserve's interest rate announcement yesterday, trending with other beaten down stocks that stand to benefit from low interest rates and the jolt they are expected to give to the economy. There was no major news on ChargePoint today, but yesterday's rate decision from the Fed was enough to push the stock up by double digits. The central bank did not adjust interest rates and indicated in its forecast that it expected 3 cuts to the Fed funds rates, lowering the benchmark rate from the current 5.25 to 5.5 range to 4.5 to 4.75 by the end of next year. So indication that rates are going down. We're done with interest rates going higher, and that's going to benefit all the debt-laden companies out there. ChargePoint has struggled badly this year with slowing demand for EVs, macro challenges, and a threat from Tesla as a number of EV makers plan to switch to Tesla's North American charging standard, forcing ChargePoint to adapt. Now the company is struggling on multiple fronts as revenue fell 12% to $110 million in the third quarter and a loss of $158 million under GAAP. ChargePoint also has nearly $300 million in debt on its balance sheet, though that is at a fixed rate, making it less sensitive to fluctuations in the benchmark interest rates. However, if the company continues to lose money, it might need to tap the debt markets again. At least, hopefully, if they need to tap the debt markets again, it will be tapping the markets at a lower interest rates. The Fed's forecast for lowering interest rates shouldn't do much to affect ChargePoint's business directly, but it is breathing new life into the stock. The company is under the guidance of a new management team, as its CEO and chief financial officer recently departed, and the board of directors named Rick Wilmer as the new CEO. There's no shortage of challenges facing Wilmer as he aims to deliver positive adjusted earnings before interest, taxes, depreciation, and amortization by the fourth quarter of next year. But stronger EV demand would help. Still, investors should expect ChargePoint's volatility to continue as the business needs a lot of work to reach viability, and they need a lot of cash. So, going back to the charts, we're going to go right to the daily chart. And again, the reason why I say price has bottomed, we saw the huge volume kick in on the weekly chart. We had a gap down, again, putting in a floor, in my opinion, and then we see the next leg higher. Again, what I anticipate is price pulling back, retesting the lows before moving higher. I do have a target at $6 going into 2024. Thanks for watching. Subscribe. Please like the video.